Here is your start to finish guide to selling your business. Now for this guide, we're gonna assume that you have 3 years into your business sale. And that way we get to implement all the tools that we have in our toolbox to try and increase the value of your business and increase the amount of money that makes it to your pocket by saving on estate taxes and income taxes. Now the first step is going to be increase your accounting and finance game. So we typically do this for our clients is that we have a team that takes over the bookkeeping, the accounts payable, the accounts receivable, the payroll. We take all of those things off of your hands and essentially you outsource it to our team. And what we can do is we can deliver a very high quality service. We can automate a lot of the processes for you or have our people do it if it's not easily automatable. And then what that does is that's going to increase the value of your business because the buyer can have more confidence in the numbers that you show them. And then also our team can typically do it for a pretty low cost. We have one of our portfolio companies that we actually are partial owners in. We bought that company. They had 2 people in the finance department, about $85,000 a year in payroll. We were able to replace that for $24,000. Now, that $24,000 results in a lot of added value to the business. So you look at it this way, that saves the business $61,000 per year. This is a business that we had bought for 4 times cash flow. So that's $246,000 of value add just by reducing the costs in the financial management. And then by improving the quality, so we have much better records than we did before with the 2 individuals. We could add, say, maybe 1/4 of a point to the multiple. So meaning that the multiple could go from 4 to 4.25. And that would mean that basically we added $500,000 of value. So by increasing the multiple by that 0.25, applying that to the $1 million cash flow or EBITDA that we're currently generating, plus the money saved on costs, we have a total of $500,000 of value add from a pretty simple and easy to implement change. Now, the next step to add value is to start taking things off your plate and moving it to your lieutenants. So the good thing is that starting this early is you can start to do it slowly. You can gradually give more and more responsibility to people on your team to the point that you have very little left for you. And buyers are really going to like that. They want to see that the business isn't overly dependent on you because you're going to leave when you sell the business. You're not staying. So the more that you can demonstrate that the business can run without you, the higher the value of the business. And by doing that, you could add a full multiple point or a full turn to your valuation. So meaning you could go from selling from 3 times your cash flow or EBITDA to 4 times your cash flow or EBITDA. So let's say you had, again, another $1 million a year business. You've just added $1 million of value by parsing out the current activities that you do yourself. And doing that 3 years out gives you time to do that gradually. And doing that gradually also gives you time to really get used to giving up control. It's gonna feel really unnatural or uncomfortable to let other people make decisions. They're gonna make decisions that are different than the ones that you would have made. But you just have to look, is it okay? Is it still gonna work out? Just because someone does something a little differently than how you would have doesn't mean that their way is wrong. The next is to formalize sales and marketing. You can do this either by hiring an ad agency. We also do this for companies that we work with. What we want to do is we want to improve the SEO, so the search engine optimization. We want to up those Google rankings. We want to run paid ads so that we'll get paid clicks through Google. We want to run placements on different websites that'll highlight your services or your products, and even implement some social strategies. But really, we just want to get the name of your company out there, and we want to implement an automated sales process. So we want to make sure that leads come in, they're followed up right away, that we stay on top of them and then get meetings booked, or that you stay on top of them until a sale is made if it's a product. And we want to make it so that your sales come from a process, not from a superstar salesperson or from you. That's the thing that buyers really don't want to see, is that a business that generates its sales from you, because again, you're not going to be there to generate those sales after you've sold your business. And all these sales processes, they're probably going to take 6 to 12 months to implement. It really takes time, and marketing campaigns don't start generating results right away, day one. They take time to get rolling. So the benefit of doing this, starting it 3 years before the sale, is that you can spend a year implementing these changes, and then you'll have 2 years of it running to grow the revenue of the business, which is hopefully going to grow the bottom line as well, which that's going to increase value. And then having these processes where sales are generated by someone other than you, again, increases the multiple that's applied to that higher cash flow. So now that we've checked the adding value to the business through cleaning up the books, unloading processes to your lieutenants, and implementing new sales and marketing campaigns, now it's time to focus on your taxes. This is going to be the biggest taxable event in your lifetime, and you want to start implementing strategies that can reduce those taxes. Now, so at this point, you want to engage your tax attorney and your wealth advisor to start thinking about strategies. So there are a few different types of taxes that might come into play. Depending on how your business is sold, you might pay income tax on a portion of the sale. You might have a depreciation recapture, or you might be taxed at capital gains. And you also might have some estate tax considerations if you're selling a really large business or if you've built up quite a nest egg. Now, there are strategies to reduce your total tax burden. There's something called an F reorganization, where essentially that can shift taxes from ordinary income and depreciation recapture to capital gains. Capital gains are taxed at a much lower rate than ordinary income, so that can be a really big tax savings. You may also want to consider some trust structures. There's things called GRATs and CRATs. Basically, they're ways that you give up some control of the funds, and that's going to give you a tax benefit on the income tax. It's a very complex strategy. You're going to want to work with your estate planning attorney to implement one of those. There are also some investment strategies that you can follow. There are things called opportunity zones that if you invest in, that can eliminate your capital gains tax. And there are also certain investment strategies that are set up with the purpose of generating capital losses. So they can still grow your account, but while it's doing it, it can generate what's called realized capital losses that are then used against your business sale. It's a strategy that needs to be implemented years prior. So that's where it's really good to start working with a wealth advisor that's familiar with business sales, that they can start implementing these strategies and work along your estate planning attorney and your tax attorney. And they could potentially save hundreds of thousands of dollars, if not millions of dollars, depending on the size of your business sale. And if you're really fortunate that you're having an estate tax problem, which means generally you're going to have an estate when you pass away that's in 2025, it's $14 million per person. So if you're single, if you're going to have over $14 million, if you're married, if you're going to have over 28 between you and your spouse, you're going to want to start implementing strategies before you sell the business. You might want to start transferring shares into trust for your heirs, or start thinking about different strategies to freeze the value of the assets in your estate, or to push things out of your estate today while they're at a lower valuation, while you take a smaller hit to your estate tax exemption. And you're also going to want to sit down and think about, what are you going to do with yourself when you sell your business? So how are you going to spend your time? Do you have activities? Do you have boards that you want to serve on? We find that a lot of business owners really struggle moving from being business owner, where the business is so tied into their identity and who they are, and they're just constantly working in their business, that it's really hard to separate themselves from that business. So you want to start thinking about what your next chapter is going to be before you sell, and make sure it's something that you think is going to make you happy before you decide to sell. Because hey, some of the goal of doing all the prep pre-sale is that we'll make the business run so smoothly that maybe you want to keep it. So it's good to make that evaluation. So now notice we're pretty far into this video and we haven't even started the sale process. So most people, I'd say 99% of people selling their businesses don't do this prep work up front, and they're costing themselves hundreds of thousands, if not millions of dollars, by doing just a little bit of work in those few years before you sell your business. But now it's time to try to sell your business. It's time to hire an M&A advisor or a business broker. This is going to be a very important hire. This person is going to be the first impression of your business. This person is going to leave the lasting impression of your business for your buyers. So in a way, it is a shame is that that's going, a person that doesn't work for you and maybe doesn't know your business that well is going to be the primary representative for your company. But that's why you want to take that hiring really seriously and make sure that you hire someone that you think can present your business in the best light. Now, a good advisor, they're going to do as much of the work up front so that there aren't any surprises later. So you'd expect a lot of time collecting documents, and they'll be doing some due diligence themselves to collect everything they need from you so that the process will be smoother and faster later on. And then what they're going to do is they're going to take that information, they're going to put together what's called a CBR or SIM, which would be confidential business review or confidential information memorandum. Basically, it's just the main marketing document for your business. It's going to give the history, it's going to highlight the organization, your employee structure, it's going to show the financials, it's going to give a broad overview of your supplier base. Not too much detail that anyone can go and steal anything from you, but that a buyer can have some idea if this is a business they're interested in. But even before those documents start getting sent out, what your advisor is going to do is they're going to create a listing for your business. This is going to be very broad. So this is going to give people a general idea of what your business is, but it needs to be done in a way that your business is no way identifiable, because we don't want anyone to know that you're selling your business. We don't want your employees, your customers, or your suppliers to know about the sale. So it might say, and rather than giving your exact location and name of the business, they might just give the state or the region of the country or the city, and they'll give fairly broad terms in the description so that no one knows it's you that's for sale. And then your advisor, they're going to go through the pool of potential buyers. They're going to work with you to narrow that pool down to, say, 3 to 5 very serious, well-qualified buyers. You're going to sit down and talk to those buyers either through video or in person. They're going to ask you a lot of questions. You're going to ask them a lot of questions, because remember, you get to choose who you sell to. So you want to decide if the person that you're selling to is someone you want to sell to. And so after that interview process, which is a two-way interview, they're interviewing you, you're interviewing them, hopefully you'll have a few offers that you can look through. Now, there's a few different things you want to look for. It's not like selling a house where you just want to take the highest offer. There are going to be other terms. They're going to ask for seller financing. They're going to ask for transition support. There may be a lot of other factors within the offer that maybe the highest price offer might not be the best offer for you. So you'll sit down with your advisor, you'll go through that, and then you'll accept an offer. Now, generally, the timeline after an offer is accepted is typically 3 to 6 months for a deal to close. So now during this process, it's going to be really frustrating because there's typically going to be a bank involved, and both you and the buyer are going to be somewhat in the dark of the timeline of the bank. The bank's always going to make it seem like approvals are coming the next day, and every day for 3 weeks you think it's coming. It's a very frustrating process. So just expect that coming in, that it's going to take 3 to 6 months, and that time frame is normal from accepted offer to closing. And then finally, once you have the deal closed, all that's left is your transition support. So that's going to be whatever you negotiated during the contract stage of the closing process. This could range from 2 weeks for a business that's really simple, or maybe a franchise where the franchise is going to give the training and really not a lot of the training is going to come from you, to a full year if you have a business that's very dependent on you and you need to transition a lot of relationships with customers and suppliers. The buyer might need you for a full year. And now you're free. You're done. You've finished your transition. The business is sold. You're off to do whatever it is that you've decided you want to do in retirement. So if you're thinking about selling a business in the next few years, or even if you're ready to sell right away, go to our link and sign up for a free consultation.